let's move on. Let's get back to the markets. We have to, this is a financial show, and we've got red ink this morning. Not as bad as it was a half hour ago. We're down 130 on the Dow. Mike Lee joins us this morning. Look, we're down even more following yesterday's sell-off and the sell-off the day before. Where's this market going?
Yeah, I think it's going to be hard to break out. So we have several technical factors. So when you look at advances versus decline, and just a couple days ago, you're looking at a golden cross where the 50-day moving average passes the 200-day moving average. Now, that's euphoric if you're a technical analyst and the voodoo gods behind the world of stock market technicals. They love to see that sort of things. But however, on the fundamental standpoint, the underlying is just falling apart. You had the horrible industrial production number yesterday, horrible empire manufacturing. You have interest rates that are high. It's really ugly what's happened in housing and manufacturing. All these things point to a recession. But earnings typically bottom somewhere near 6 to 9 months after the start of this recession, and the market bottoms 6 to 9 months before those earnings bottom.
So wait a minute. So what we're looking at is an obvious slowdown in the economy right now, a possible recession in the immediate future. But doesn't the market rally when that recession appears to be very mild and we appear to be just gradually coming out of it? In other words, can't we see a market rally this spring? No chance?
Well, it all comes down to the Fed. And so as the market slows down and you anticipate as the economy slows down and you anticipate a Fed pivot, then everything takes off. That's the history of it. And that's why the market typically takes off long before the economy turns around, whether it's a deep recession or not a deep recession. So in March, the market bottomed in the March of 2009. The unemployment rate peaked in April of 2010. So long before we're out of this recession, this market will turn. But a lot of that has to do with when the Fed will pivot. I think the Fed stays higher for longer because of the probability or chances of a double top in inflation.
Okay. We're almost out of time, but we're down from here, according to Mike Lee. That accurate?
Well, I think we're in a trading range. I think the market could hold in there, but it's going to be hard to break out until the Fed pivots or the economy starts to look better.
And we're not there yet. All right, Mike Lee, thank you very much. Now.